Okay guys, so here we are back on the Euro Yen chart, and now we're going to discuss this analysis once more, now that you have the knowledge we just discussed with our airplane analogy. But before we do that, just to show you guys that we actually trade based on this type of analysis, I'm not currently in any open positions using this type of analysis, but we did have a trade on Monday in the EAP training program using this analysis. So let's go ahead and go over to that email. Right here's that email that was sent out to traders 3/6, which was Monday. And as you can see on the chart in front of you, what we had here was a break above a previous resistance while a market was in trend. This is our previous resistance, and what we waited for is the market to pull back to that resistance level before opening a position to go long. We ended up getting first targets hit on this trade for around 82 pips. We'll head over to the dollar Canada chart and show you guys the profits on this. And guys, if you'd like to learn more about how to get emails like this 3 to 5 times a week and join us in the EAP training program, then to learn more about how to do that, there's a link in the description labeled EAP training program. Heading back over to the charts now, let's look at the dollar Canada. We'll go back over to the email, scroll down. As you can see, our first target was at 1.2999. If we go back over to the dollar Canada chart and place a horizontal line at 1.2999, as you can see, we barely ended up getting those first targets clipped here on this trade. So that ended up being a win of over 83 pips using the exact analysis we're talking about in this video. As you can see, just to go over it one more time, we have a market in an uptrend. Big turbulence here, or that major level of structure, before breaking back above that level of resistance, and then the pullback into that resistance gave us opportunity to enter the market and capture over 82 pips of profit. And now we'll drop down to a 4-hour chart. I'll show you guys just a couple of other examples of this so you can see that it doesn't only work on the daily chart. Here on the 4-hour, I already spot one. We have this pushed down, big turbulence, right? Consolidation area, 1, 2, 3 touches. After we get a break below these touches, what happens? The market pulls back up directly into that previous level of structure. And let's go ahead and do this on one more pair. Let's go ahead and go to a different chart. Let's do the pound Swiss. This is going to be completely random, guys, and let's go down to a 15-minute chart. So on the pound Swiss, 15-minute chart. Again, this was completely random. I did not look through charts to try to find the best ones for this or anything like that, but here, as you can see, we have a previous level of resistance right here. The market pushes up, breaks above that previous level of resistance, and then what happens? We pull down right into that level of resistance, and so far, we've started up into new highs. I would actually expect this to break into new highs and continue into trend continuation here on the pound Swiss. So there's a few other examples on different pairs and different time frames of this working out. Now what we're going to do is discuss a way you can add an indicator to this to actually make this more non-subjective, meaning easier to follow, with a set of rules and even more accurate. So let's head to a different chart and do that now. Okay guys, so here we are on the dollar Canada, and what we're going to do now is just combine a very simple indicator with this structure-based analysis we just talked about in today's video. And I'm going to show you guys how to create non-subjective rules to build a strategy around or to build a trading plan around for absolutely free. So guys, if you found value in today's video, then make sure you go ahead and click that like button for me. And if you find this content helpful and you want to learn more about some of our other paid programs and dive a little deeper into your Forex education, then you can find out more about those by clicking the link in the description labeled EAP Training Program or by going over to thetradingchannel.net. But let's go ahead and apply the indicator here on the dollar Canada. We're on the dollar Canada 1-hour chart, again, changing time frames, changing pairs to show you guys that this works all around. And let's go ahead and apply the indicator now, which is going to be nothing more than a 200-day exponential moving average. So I'll go ahead and let you guys see me edit this so you can see that this is exactly what I'm doing. Make it black so it's easy to see, a little bit thicker, and 200-day exponential moving average. Okay, now that we have the 200-day moving average on the screen, the rules we can apply to make this almost completely non-subjective is the fact that we want to see a market above the 200-day moving average in an uptrend making new highs before looking for that previous level of resistance to become support. Okay, so let's do that here on the dollar Canada. So we get this break above our 200-day moving average and our previous high right here, right? And I'm going to go through this entire chart with you guys. February 16th of 2018, we're going to go all the way to today's date just doing this. And again, guys, I haven't went through charts and tried to find the best scenarios for this. You're going to see losing trades doing this. You're going to see losing trades while we do it on the dollar Canada, I'm sure. I don't really know. I haven't checked, but I'm just going to show you guys the power of this, especially combining it with this indicator and making it non-subjective. So let's take a look here once again. pushing above the 200, pushing above our previous high right here. What happens next? Well, we get a pullback into our previous level of structure. What did we just talk about? We wanted to get this pullback into this previous level of structure. Was this a major level of structure? Yes, this would have been a large amount of turbulence in an airplane, right? So that major level of structure, after the market breaks above the 200-day moving average and that level of structure then pulls back into it, would be a great place to look for some buying opportunities. We get those buying opportunities, we push up, we do what now? We break above our previous level of resistance, right? That previous level of resistance is right there. Then what happens? This level of resistance, does it look like it would be a spot you would remember on an airplane if you started to take off and had this big drop out of the sky due to turbulence? Yes, right? This level right here, this big drop, would definitely be something you would remember. So it is a major level of structure. After breaking above it, we pull back to our most recent level of structure that we broke. Boom, we pull back into that area, we get another push higher. This push higher breaks above what? Our previous level of major structure. Again, airplane, this would be big turbulence. This is the most recent level of structure that we've broke. We come across, the market pulls back, doesn't quite get there. Again, it's not going to get there every single time. You're not going to get a trading opportunity every time you break into new highs. But this is the most accurate place in a trending market to capture large gains and massive profits. So let's go ahead and scroll the chart sideways. Now, this is our new level of structure that's just been broken. That's what we're going to be paying attention to. Scrolling sideways. And now we have another new level. Because of this consolidation in through here, this would have been major turbulence pushing down, right? So this is going to be our level of structure right in here, where our line is at 1.268 even. So that's what we're going to be looking for possible trades. Market pulls down into that area, gives us a trade. Boom. Okay, let's see that again. This area, what did I say? 1.268. As soon as the market pulled down into 1.268, we got this massive push up. Awesome, let's continue. Continuing. Here would be an example of a loss. We have the market pushing, breaking above our previous levels of resistance, pulling back into those levels of resistance. If we would have gotten an opportunity here to enter the trade based on an entry reason, then more than likely we would have been stopped out of that trade on the way down. And now something interesting's happened. Now we started creating new lows. Well, we're not looking for a trade anymore at all until we break into new highs, because we're looking for trades based on our most recent level of structure breaking. So we're not looking for anything. Now we're looking for trades. Why? We just broke above our most recent high. This would not be a pullback we'd remember on a plane. This is not our major structure. This is our major structure. Continuing, looking for trades at 1.266 even. Pulling back now, getting pretty close. That would have been really close to our zone, really. I mean, looking right in here at this previous zone of resistance, and let's see what happens with the market. We get that pretty big push up. Awesome. Next up, we'd be looking right here, 1.271 for possible trades. Market pushes up. Then we break above our next resistance level here. What happens after that? We pull back into that resistance level and push up. And guys, that's all I'm going to do for today. This is going to get really drawn out. I'm sitting here looking at the time on this video, and it's getting pretty long as is. So, as you can see, this works on multiple time frames with multiple pairs, and adding that 200-day moving average or your choice of moving average, or adding other conditions is not against the rules. You can add any other conditions to this type of analysis in order to make it more accurate for you.